Hello, ladies and gentlemen. Another round of SMC meets order flow tonight. Tonight we'll be covering what is CVD, Cumulative Volume Delta. So on my charts right here, you will see that I have two subcharts. Please excuse that notification. I have two subcharts underneath my main chart. And both of these are cumulative volume delta. They are just currently they're printing in the same fashion where they are in a histogram form, meaning vertical candles, downward black bearish candles, and blue upright bullish candles. On your chart, it may be green and red. That would be your factory settings, or any other color that you may have customized it to. So on a higher time frame, this let me get out of the way. So looking at these, this one is the CVD Divergence Oscillator. I like this one. This is by Trading Finder. And there is also just the regular CVD that I use from TradingView. So let us see. Now going to a lower time frame. Basically, I want to show you when this one goes into candlestick form and this one remains in histogram form, how to use these within your trading. So cumulative volume delta is measuring the aggressors, the aggressive buyers or aggressive short sellers within the auction. Let me turn off the volume bubbles. Okay. So how you can use this to spot key trend reversals and identify when a trend, whether it be bearish or bullish, that side of the aisle has become exhausted. You can identify passive absorption, meaning where large institutional market orders, not necessarily limit orders, but market orders, when they're actually clicking the execution buttons up here to just instantly get filled at any price that is available at that time and place. If price jumps, they're still going to get their order filled, and they are absorbing the buyers or sellers. In this case, we see a bearish trend. This is today's price action. So in New York, we opened low. We traded around. This was a little choppy at open, typical. Actually, for the last month, it's been typical to just absolutely explode at open on a bullish trend for New York. Before I get a little carried away here, if you guys want to join up in the Discord, you will see the QR code over there on the right-hand side of the screen. That will bring you directly to an invite to our Discord. It's a free community. You can live trade with us, check out the community wins, etc., so on and so forth. So back to this. Also, please like and subscribe if you're viewing my content and you find it helpful and informational. That goes a long way. If you don't mind even leaving a comment just saying, hey, great video, that helps the algorithm put me in front of more and more viewers. Okay, back to the content. So right here, we have in today's trend, this is a 2-minute chart. Let me go to a 5-minute chart. Right. This is today's New York session. Okay. So here we can see bearish candles. And when you see these large wicks and retracements right back up, that's an indicator of passive absorption, meaning market fills are taking place. We are dipping into a discount, passive absorption, dipping into a discount. This isn't really, I wouldn't call that absorption. When this bullish candle opened and we punched up with bullish momentum, how this retraced back down so deeply, we formed a bit of what we would call a doji candle right here. I'm going to eliminate that. That was just from analysis during the trading day today. This would be, bearish absorption. That bullish candle saw a lot of retracement within that 5-minute period, leaving a long, deep wick. So that is bearish absorption. And then we have our next 5-minute candle, pushes down. We hit value area low of the volume profile. If you don't know what a volume profile is, I do have a great video on that called What is a Volume Profile? In the SMC meets, actually it's in both of the playlists, Entry Level Education and SMC meets Order Flow. That is very informational. So we hit value area low. Huge absorption. Institutional and smart money players are stepping in at this key level. We had formed that level at Asia Open in the overnight session. So reaction off of value area low, and now looking at the cumulative volume delta charts, right? What do we have? We have got, I want to make sure I'm not blocking it. Perfect. Okay, so we have a large black bearish candle on this top histogram. I use them both because they're both set to different settings. The candlestick chart is based off of a 15-minute anchor point. And the histogram is a little bit more sensitive, the one that I have up here, and reacts a little bit quicker to price. I like to use them both together as a confluence. When both of them align, that tells me that my analysis is pretty strong if I'm already thinking that we are going to be taking off in an opposing direction. And then I get my confluences on here. I wait for the rest of the TCP model to appear. I do have another video on that as well, the TCP entry criteria, if you want to check that out. And then I enter my trading position. I used to trade IFVGs. I used to trade SMC. I still use optimal trade entry within my trading today. And even like right now, you can see this is a beautiful optimal trade entry play, right? Bullish price, trace down, respected these three levels, the 0.618 to 0.79. Again, retrace down. I'm sorry. We punched down. I measured from here up. Bullish candle ripped up. Then we retraced back into these zones and then continued from there. And what do we have? Resistance directly at this level. Fibonacci, beautiful thing. Punched all the way to new all-time highs at the end of the day as well. This morning, the boys and I were in the Discord. We had already noticed that we had 15-minute relative equal highs in the London session pre-market. The London session combined with pre-market, we saw we had London highs up here. We also had previous session highs resting here. Actually, I believe the 15-minute relative equal highs were somewhere over here. But either way, we had stacked liquidity levels up high, giving me an indication that price was going to most likely be reaching for these levels. So, how can you have spotted this absorption or that the trend was reversing at this level? So when price came down here, we were now 15 minutes into open. So that's generally when I begin to start looking for a trade. I don't like to take trades prior to that. So the volume profile is going to measure the whole session. I'm going to actually delete that. And if you were to look, each candlestick follow that vertical line directly down, and it will put you in line with both CVD charts so that you can just one at a time use these for reference. Okay, so we see this bullish retracement. Let's even go to a lower time frame, because now that we punched all the way down to value area low, this is where we are anticipating to see our long positions play out. That's what we had been hunting for in the morning session. We had noticed that the S&P 500 had already swept Asia lows. The NASDAQ had not. At that time, the NASDAQ was still resting, I believe, up at these levels. We had punched down. The NASDAQ failed to take the Asia lows, but on a lower time frame, the 2-minute, we did notice a CVD divergence, bullish. I'm going to put the volume footprint candles on. It's going to look a little crazy here for a second. Oh, of course. Of course, the history is not going to, it stops right before I want to go over. But there is a likelihood that within this period of time, we had also had one of these black candles close with a red or a green delta, one of these boxes down here. So let's find right here we have a bearish candle that closed with a green delta. That is it. If you get that paired with your CVD divergence, that is strong confluence that the short sellers that have opened up the auction in today's New York session were beginning to grow exhausted. The trend was weakening. We tagged in to the value area low. Let me get that volume profile back up. So we tagged value area low right here, immediately had a reaction, even on the 2 minute. Let's go to the 1 minute. So more and more sensitive time frames. And you will see that this was a pretty quick reaction, right? This 1 minute candle closed right here. Strong bullish confluence. Looking at that CVD, we still have strong bearish confluence. We have a low formed right here on this price candlestick chart. Down on the histogram and the CVD candlestick chart, at this level, we have the low formed, and at this level, we formed a lower low. Great. Moving to a higher time frame, we had noticed already signs of weakening, right? On the histogram chart, at this low, looking down, our lowest point in price, say this candlestick right here, vertically following it down, look at this bearish candlestick, okay? Now look at price wicked lower on the next 2 minute candlestick, but moving down to this histogram, what did we do? We formed a higher low. So that's our first indication of buy-side resistance, right? Passive absorption. It's not exactly present at all times on the depth of market. Looking over here, I have a live funded account, so that's why my depth of market is very detailed, but you can tell the total number of short sellers limit orders down here compared to the total number of buy-side limit orders up here. And sometimes you can also pick out a key level that has a high level of limit orders and liquidity resting in a likely area of rejection. So let me get the volume profile up here one more time. Every time I switch time frames, it seems to disappear. So now, right here, we are already observing price. We see a very subtle CVD divergence. Okay, so we see the bullish trend continue. This at this moment isn't enough. These two candles, it's not necessarily enough for me this close into open. I would want to see likely a CVD divergence corroborated between the two charts this early into open for me to really say I'm gonna kind of go against my normal trading pattern here and dive right in. But so we retraced back up. We failed to create new highs with the candle bodies. Candle bodies closed lower than these, so showing still a bit of continuation of trend. Now we had displaced lower, displaced again within that next 2 minute period. And in these candlesticks, what do we see? Aggressive sellers stepping back in, right? Both charts, aggressive sellers, aggressive sellers. But what do we notice now here on this one? This one, very aggressive sellers. On the slower CVD anchor, we are seeing another divergence, right? Price has large displacement on the CVD, but it is not creating a lower low than right here. But in price, we formed this low and a much deeper retracement or a push lower. So we've got signs of sell side and passive absorption. I mean, sell side absorption, passive absorption, shorts becoming exhausted, some of them closing their positions, taking their gains from this displacement. Others are just entering the markets and watching the bullish price action and volume is taking over. There's more buyers stepping up to the plate, less sellers in the auction at the moment, and that is giving us this divergence. So Now we get full confirmation of that when we look to this final candle body, right? This final one on the histogram forms, we have this automatic indicator line that just popped up because that's part of this oscillator here. That I like this one a lot. And we still monitor them individually. I would also recommend to do so. The indicator isn't perfect. It doesn't always work as intended to just flash right before your eyes when you want it to. But if you're on the ball, this is a very great indicator. When you pair it with things like this candle's wick just tagging the value area low, but then retracing so quickly up, that's a great sign of absorption. So now I will turn on these aggressor volume bubbles. And what do we have? We have short participation stepping in. We do have bullish participation, but they are getting absorbed by shorts. Shorts still have control of price. We have a mixed sentiment, the yellow bubbles to show that it's a mixed sentiment within the auction, right? We have a lot of volume and participation, but it's relatively tied for who's winning, who's losing within that candlestick. Next one, bullish expansion. Shorts take back over. This is still at this time only about 10 minutes in to New York Open, or 12 minutes in. So we see this resweep of the lows that were created at open. And down here, we are forming our bullish CVD divergence, meaning deeper low than here on price, but on our CVD, measuring the volume of the auction, it is telling us that the shorts are exhausted. We now have less selling pressure within this area, less shorts participating in the movement of this candlestick than we did up here. Very, very aggressive open for shorts. Pre-market was very aggressive for shorts. We had a data release right at 8:30. Today was, I believe, what, PPI, right? Yes, today was PPI. So that came out at 8:30 a.m. Bearish release, pumped lower, very aggressive short selling. Data highs was an additional draw that we had for our higher confluences to believe that we were going to move to all-time highs. So now, going back to volume footprint, we see mixed participation. This is all the indicators pointing to you with the volume weighted average price line resting higher than price itself, showing that price has now entered a discount. We are discounted, and that for price to become balanced again, it would need to surf back to this orange line, point of control, or higher. If it goes higher, we're in a premium. But, so moving forward, for the TCP model, we need to see CVD divergence at a key level. Can't just be anywhere within the chart. At a key level, value area high, value area low, point of control. I personally don't like to take trades from you. We have taken many trades from the point of control in the community. Those you need to be a little bit more dynamic and flexible with, and it's kind of just an experience thing. You really need to see strong confluence. You can't just run off of the TCP like you would at value area low or value area high. If you were to take these trades from value area to low, value area high to the point of control, it's a very high win rate. We always like to reach for areas like from value area low to value area high to increase our risk to reward ratio. That's the goal, right? But sometimes that doesn't pan out. Sometimes we tag the point of control and we reject right down into an area that we've been trailing our stop loss, or so on and so forth. So I'm now, I haven't lately, but I do think I should be in the habit of taking a partial at the point of control and then letting a runner or two go to the value area high of the volume profile. When session opened this morning, value area high, it's pretty much remained the same. It may have pushed up. I believe it was somewhere in this region. So either way, value area high somewhere over here, right? The point of control was down here. So we were a little bit reluctant, but we ended up catching a long. I got stopped out for only a partial profit. It was a winning day. I had already had a great Asia session. Let's pull up the P&L from today and last night. So you can see right here, this is the community wins page on our Discord. We had one of the gentlemen in there is a complete beast. He's been killing it. He slammed for a nice play. I was between the Asia session and last night in Asia session, I was up 710. So where I got stopped out in profits, I increased my daily gain from Asia session to the New York. The P&L goes from 6 p.m. open to the end of the New York session instead of starting on a 24-hour time frame. So either way, I made $820 between the Asia session and the New York session, where I was already up. I was trying to protect my gains as opposed to being a little bit more risky if I was just entering for a first trade of the day. Is this the trade idea I had at play? This was the Asia session last night. We had a great trade. Oops. We got all sorts of winners. We've been crushing it. It's been great. Definitely hop in the Discord community if you want to learn how to incorporate order flow into your SMC existing trading habits and trade with like-minded traders. Back to the charts. So, all right. Now, focusing on CVD, right? So we've just established a bullish CVD divergence. And then you see right here on that candlestick chart, we have a massive jump in volume, right? The cumulative volume delta was all the way down here, and then it hopped right up within this area of consolidation. And so that tells me a lot of short sellers have let go of their position, or a ton of buy-side liquidity and buyers have stepped into, people interested in taking long positions have stepped into the market to combat these short sellers. And at that moment, we are now back to relatively balanced. So at this time, the CVD was reading on the right-hand side. You can see on the right, CVD at that low is reading negative 50.73 thousand. But then it made an immediate jump within a 2-minute candlestick all the way up to negative 307 and then climbed to 2.82K. So pretty large let go from sell side liquidity. So great. Now we're seeing all the confluences we need to entertain longs. I've got bearish candles that are closing with a green delta. We will do another video as well on delta divergences solely. To be honest with you, there's not too much on them. I can just even include that. A delta divergence is I like to use this analogy is that in a hypothetical scenario, say there was only 1,000 shares to be sold within that candle. If there was 700 in this bearish candle, price is trying to push down, and there was 700 short sellers, but there was 300 buyers. The delta would be the difference between the two, right? So we have 7 and 3. If we were to take that and subtract, that means we would have a red delta of 400. So there was 400 more short seller participants than there were buy side participants. In this candle, it has a green delta. So there was more buy side or, longs, buyers present within this auction. Each candle is an auction. So we have a huge amount of absorption at the exact same time. Right here, we have price opened here, tried to push down on a candlestick. Everybody in here probably already knows this, but for anybody new, on a bullish candle, the bottom of the body is the open. On a bearish candle, the top of the body, because it's moving down, is the opening price. This one, it pushed up, pushed back down, and then closed here. On this one, it opened here, it pushed down, pushed back up, and then retraced and closed here. So on this bullish candle, price retraced down. We had buy side volume step in, a lot of participation from buyers, purchased down at these levels, pushed price right back up with a snappy reaction. Red delta, but we pushed up. So it's showing sell side weakness. The trend is growing weak. Buyers have stepped in. We have absorption. Still resting at the volume weighted average price line. So to me, that is still a kind of wait and see moment. We have, CVD divergence. We have delta divergence. If I was looking to take a short, I want to see a blue candle with a red delta. Right here, we're getting mixed divergences, right? I've got bullish candles closing with a red delta, and I have black candles closing with green delta, and we're sitting at the volume weighted average price. So I'm still kind of just sitting on my hands, and I'm waiting for that confirmation, right? And so now, what do we have over here? We have very snappy bullish price action. But what do we have before that? 2 candles consecutively closing bearish with green deltas. And then boom, relatively, this isn't an explosive move here. I mean, we're talking about, we're pretty zoomed in at the moment. So let me measure that. We're talking about, it's a decent little move. We have 43 points, right? 43 bucks. A point is $1 if you ever hear me saying that. So points, I'm referring to $1 in price action. So, and we created large imbalances. So where this next candle opened and closed below, or it didn't close below, but it pushed right through, I call these imbalances that get highlighted. I have specific settings on here to highlight these levels of imbalance, and these levels are areas where there was 500% more participation. If these were black shaded boxes on a bearish candle, there would be 500% more short sellers in that location than there were buyers. But on this candle, we are looking at a bullish candle. So right here, we have 500% more buyers of longs, or people taking long positions, than we do short sellers at those specific levels. So I would want to see this candle retrace down into this imbalance, or buy pad. If you ever are in the community and you hear me say buy pad, that's what I'm talking about. And this would be a sell pad, a bearish one. So I would want to see this price push down into that buy pad, respect it, meaning not get through it. I would want to see buy side aggression, more long participation stepping in to absorb these shorts at these levels. Where we had pushed down below and closed with a red delta, I still chose to sit on my hands. So I'm now just waiting for the final level of longs to let go. And me and another gentleman had taken long positions today, right about here. So we weren't exactly, it was either here or we took our long positions up here. We also were dancing at the point of control. So just like I said, I don't really like to take point of control trades. I have to be super discretionary because these are the areas where people get stopped out the most. You see this large wicking action. Price is violently whipping up and down within these levels. So if you're trading on the NASDAQ like we do, these aren't little moves. These are moving 50 points, 100, not 100 points, but 50 points a piece, or 30 points a piece, right here we have this bearish candle went from 29, what was that? 250 all the way down to, so like right around 40 points, it's a decent little slap around. That can be $80 on 2 micros. If you were sitting in a position right here with a stop loss and you're up a little bit and it whips back down, you just lost $80. If you had a bigger position, it could be more. So at this time, I chose not to enter until I believe it was off of this candle. I had entered. I saw this one push up. This one was holding the imbalances, massive green delta. These weren't making me feel good, where we had bullish candles closing with a red delta. There was a lot of mixed sentiment in this range. Shorts were really trying to push price back down. They did regain control a little bit, but either way, we entered long off this. I had noticed that we did have what's called a devil's mark, a wickless candle. That term was coined by ICT. And the green highlighted area represents an unfinished auction. Price ripped from that level so fast that the auction wasn't able to get finished. The full amount of participation from longs or short sellers didn't get their positions filled. So price just took off. We had a large imbalance, a lot of volume and participation. Ripped up. We took a long. We were in here. Once price had then created I believe it was at one of these levels up here. I actually may have gotten in a little bit earlier and then trailed my position to one of these imbalances up here. When price retraced back down, that's where I got stopped. I can turn on my execution marks and we can just get to the bottom of it. The trade that I took. Okay. Where are you? Where's my execution marks? Do those only show up if the chart, like, because I re-logged in today? I had witnesses to this in the community, so this is not BS. And you saw my P&L increase by like $50 an account, or like $100 across the 3 accounts. So it was like $40 that I made. Nothing crazy at all. I very well may have gotten in when price rocketed up to one of these candles and we held above volume weighted average price. I actually think I did, and then I trailed to this imbalance, and when price punched back through, I had gotten stopped out, and I said that I was seeking much higher levels, but with this strong of overnight price action, it very well could have been an open high, low close scenario. It really was looking a little bit mixed. And on top of that, while price was sitting over here, we were relatively balanced in between the previous low of day. With this bearish trend, we could have very well seen continuations down to the, this was previous low of day from the prior session. I didn't even mean to have that marked. That was just old analysis, but that is also previous New York AM lows. We had 4-hour sell side below that, and we also had the previous week's low. So I tend to notice that there are a lot of trends where price will move from previous low of day or previous week low up to the previous high of week, previous high of day. Those are a lot of the key levels I like. I like a lot of 4-hour sell side, 1-hour sell side, buy side liquidity levels. I don't think I use as much of the 15-minute levels that I used to, because now I get a pretty good painted picture of where participation is happening in the market. I really have been so much more accurate by incorporating volume profiles within my trades and hitting much higher R trades. If I was more risk on, say I didn't have the win from Asia session the night before that I was trying to protect my gains, and I had just let this run, it would have been a completely winning trade. It was great analysis. I got in somewhere over here. I remember I had it was like 19 points for my stop loss or something. This actually might have been around when I had chosen to get in. It was like somewhere around, no, not that big. I don't know. There was imbalances. Let me see. I'm upset that I don't have the execution marks. But either way, say I'd gotten in somewhere around here and I have my stop at those imbalance levels and we were pushing up. That's not perfect for the trade that I took today, but I was targeting value area high, and initially I was going to reach up for new all-time highs right here because we had so many stacked liquidity levels, right? We had generated low resistance liquidity right here. We had relative equal highs resting at the high of London session. all indicators that we were probably going to reach up here and smash through those targets. So I was somewhere around the 29,481 level is what I was going to target. So say we went for 29,480 even, right? I was shooting for around a 5, 6, 7 hour trade. Would have been a great position. But I'm very happy to have taken my stop out with profits and had a winning day. That's great. Let's go ahead and scan over the Asia session right now. We are right at about 8:30 p.m., which is right around when I like to enter positions. I tend to notice key reversals happen right around 8:30 p.m. So right now we are super premium. The Asia session opened over here at 6 p.m. Where was that? Asia session opened here, pushed higher. A lot of bullish price action. Oh, there was my all-time high and previous high of day level that I was targeting. Okay. We have reached down. Let me put a session volume profile. I like to combine a daily profile with a session volume profile. Currently, let's see, take a look at this cumulative volume delta chart, right? We have, this is a sign of buy-side exhaustion, right? We have a huge candle that pushed higher, retraced back down. This is on a 2-minute. Go to a 1-minute. A lot of short participation. So that was the absorption that we saw on that 2-minute candle, that wick that was very long and pulled back. And this yellow line is the point of control of that candle. The most participation happened at that level. That is considered fair value for that candle. So going on to the 1-minute, we can actually see those aggressive participants step in and push price lower, right? So we have a green delta on this candle. And let's look for a CVD divergence, which we kind of have. The high of this candle is higher than the high of this candle. The candle body is a little bit lower, but I wouldn't say it reflects this much lower. On this candle, it reflects accurately, and the candlestick CVD chart down here, right? This candle is a little bit lower, wicked up, and in this candle, it printed higher. So either way, we are having divergences take place, and volume weighted average price is showing that we are in a premium. If I was to put the session on screen, it is going to adjust specifically for this session. So I don't necessarily like when price closes so drastically above this is a value area high level. This really is a good indication. Like the trade that I would have wanted to take, the session point of control was definitely where we see more consolidation around this area. I'm sure session point of control was probably lower with this accumulation and accumulation over here prior, and I bet you it has adjusted up as this bullish price action has continued. But the real trade was probably when we tagged value area high right here, right at 815, and punched on down to these consolidation levels. I'm willing to bet that those held the point of control prior. But we do have, if I was to map out the session since open, the volume weighted average price level is going to measure all of this price action. It is pointing directly towards the daily profile point of control. So that is indicating to me that price is likely to retrace down into here. Very well might not happen at this move. The sell side, the short sellers very well might not take control. We have a large CVD divergence on the histogram right here that got mapped out. And we did see retracement, but that's not very deep retracement. We have trapped short sellers trapped shorts right here. Price pushed higher, so they all took short positions there. They're in the red. They wanted price to go down, but now it's ripping up. So bulls are winning the race tonight, of course. We have ripped. So given that we are so high right now, the trades that I would like to take would be to see if price was to retrace down to, this large imbalance and hold in the value area high. I would potentially entertain a long back off of that to these highs, and that would be my target. If price was to really give me A+ confluences, I would need to see a very strong level of displacement get held. And I mean a really strong level of displacement. This candle's a rocket ship, right? So we have 3,000, almost 4,000 in volume and participation on this aggressor bubble of people taking long participation, buyers. And on this bubble, we have 2,000, not much less. But the damage that this candle did rolling up is much higher than the damage this candle did going down. So retracements from short sellers are likely to be weak. We do have the beginning of the model right here, where we have CVD divergence, red delta, so short sellers are getting weak, and we're showing prices in a premium. I would really like to see more imbalances off this candle, but it'd be in where we have a green delta on this bearish candle. That's not really a good sign. That's likely that this candle is going to either turn back around and push up. We did just flip to a red delta, so it may get snappy and aggressive onto the downside right now. But we're flipping, so went back green. Again, it's not a very strong move. I would need to see large levels of imbalance again. Like we already saw that, and it got disrespected this one time. There's a good potential. I would have entered shorts, but I doubt it where we have this large wall that's essentially painted. That doesn't mean that there is limit orders resting in those areas, but it's a high likelihood that we are going to get the same participation of people protecting their position. Large money participants are going to re-step in at these levels. Institutional traders use volume profiles every day. They are not using sell-side liquidity levels and just reading. I'm not trying to say if you trade SMC actively that you're a pattern trading, but the more and more you get into this, you start realizing that even if you're trading IFVGs, all those other things, IFVGs are imbalances and volume profiles, and the reason they get traded into so much is because price is trying to balance itself. And you will see some of them get held and some of them get disrespected. And there's a lot that goes into it. So again, absolutely no disrespect to anyone that trades SMC, because I started initially trading SMC. I've done pretty much every trading style over the years you can think of. RSI, MACD, support and resistance. I right now use a lot of supply and demand. That is institutional level thinking. And supply and demand is very real. Auction market theory is very real. That's how the market moves. And volume profiles and volume footprint candlesticks, they look incredibly difficult. Like right now, I don't like that the point of control has shifted so much higher and we're getting this absorption. This is absorption. We have a red delta, but we see that price is ripping higher and we are not holding these imbalance levels. So that's telling me that we are most likely going to continue higher, right? This bearish indicator is not really strong enough for me to hunt that short right now. Right now, we see there's a massive tug of war. And here we go. We have a red delta, but the candle's pushing higher. So price is moving much easier for longs tonight than it is for shorts. And you can just tell that by a few seconds of analysis reading this stuff. And it is a lot to absorb and it's very different, but it gives you a whole new level of understanding on these charts. So value area high has shifted up to here. It will adjust, the volume profile adjusts based off participation and the auction. And we are rejecting value area high now, right? We've got trapped longs up here. We have long participation that entered up here, and they're stuck. We are now getting them back to break even. They may build, if they were really actively building a larger position, they may right now. You're going to see a rocket ship of explosion going higher, which it looks like we're probably going to. I'm willing to bet that we're going to pump higher. But we're in a struggle. We might push back down. We could see very large aggressors pop in of short sellers. We have a red delta, but price isn't really snapping in that direction with a red delta. We're still holding these imbalances. While there's not a lot, there is still individual imbalances. So what do we see on the CVD at the exact same time? Look at this dump off from this candle to this candle. Down here on the CVD candlestick, we see a massive drop off in participation, but price is holding. It's still remaining so much higher. So what does that tell you? That we're either positioned for very easy price movement for buyers in long positions, or we are about to see a lot of longs let go and see a very strong reversal. So we can see how this develops. Where the pre-OC has shifted so much higher and there isn't much of a range, I would like a larger range for me to take a trade. In with this strong of a price leg, I'd really like to see us like retrace back down to value area high here to these imbalances. We are getting exhausted. Not super opposed to a short, but I would need to, okay, on the 15-minute, we're closing with a red delta. We are forming a delta divergence. And we also have a CVD divergence on the 15-minute, right? The candlestick histogram down here, there's a lot less participation. So this is buy-side regression. They're getting exhausted. We just did flip the delta. Right now, we do not have a delta divergence, but it's skating the line. So anyone who wants to exit the video right now, you can happily. The majority of the notes that I've discussed as far as cumulative volume delta, I'm pretty much done covering that. If you want to hang around to see how I would live trade the rest of this session, I will probably be on here till around 9 o'clock. If I don't see price develop in the way that I want to, I will then shut the charts down and just hold off on taking a position till the morning. For right now, I don't like to see. I do believe that we're going to be probably pumping. There isn't much retracement here. So up here, this marks the range in the average range. This is tonight's range. Asia has ranged 100 points from 8 p.m. at open, and the average range is 150 points. But in a normal session, like, let's take a quick peek at last night, right? You know, right around, it was pretty similar. It's kind of a rocket ship, very light retracement, and then some additional longs. Where I did the live class tonight, I wasn't monitoring price. As soon as we got in, we had noticed a massive imbalance right here off of this candlestick, which you can no longer see, and price was getting absorbed. We, I can't remember what confluences we had. It was either maybe on a lower time frame that we had entered long positions last night. I wouldn't have just entered in the middle of a move. Okay, yeah, the picture's painted very differently on a lower time frame. So let me go to just candlesticks so that we can see this. Last night we had SMTs, differences, which everyone in here that trades SMC knows what those are. I'll make a different video at a later date. So we had SMT divergences paired with CVD divergences, very weak selling pressure. This was, about 20 minutes into the session, 15 minutes into the session. And then we had taken longs off of, I believe there was an imbalance in this candle that we were holding. And we had hopped in longs targeting, I believe, these highs or value area high of the previous profile that was like somewhere in this range. And we hit. It was a great trade. So let's see what we have done since I stepped away. Okay, so if I was to have traded Asia tonight and accurately been monitoring the trade, I probably would have wanted to have entered somewhere around here, seeing this aggressive buyers pop in. If I look at the volume footprint, I'm willing to bet, yes, there was large imbalances on this candle. Prior to that, did we have, yes, delta divergence. And right here on the histogram chart, we have a bearish candle. This was pushing lower than the lows formed here, right? If I was to measure a horizontal line from these lows on price down here, it is showing that there is more selling participation happening at these levels, and it's pushing sell side volume lower on the CVD chart, but that's not happening on price. Price is forming a higher low. So we have a CVD divergence from even right here to right here. And this, you can save an indicator or save a template so that you can just quickly map it. I would put that bullish CVD divergence. And then we have black bearish candles closing with more buy side participation, green deltas. We have bullish participation reflecting on our slower CVD candlestick chart down here, all tipping their hat. I would have seen these imbalances held. In a perfect world, I like to see this delta flip, but when I would see this candle having a lower delta, and that's when the delta hits 0, it will flip to the opposing side. And so I would see that very low delta. There's a good indication that I would have sat it out, but I don't. The bearish SMT wouldn't have been enough to hold me back. I find cumulative volume delta holds so much more weight than an SMT. SMTs are great confluences. Still use them in your day-to-day, but that's not enough for me personally. And you could be different, and that's fine. Whatever helps you win. I would have been targeting a long from either in here, or if I'd seen this snap and pull back up, I might have entered there. I would have put my stop loss either below this candle or directly below these imbalances, only a 5.75 stop loss. And I probably would have been targeting that value area high. We just watched it on screen. It was presently a little bit above this one. So I would have been targeting like value area high in here. I think it was maybe even it was around where the POC is. But that would have gotten you somewhere in between like a 3-4 hour, 2.5 to 3 hour, 4 hour trade. Good little trade, right? Even with only $100 in risk on that, $400 play. And when you're hitting low risk, high R trades, if you lose 1 or 2, it's really not a big deal. So right now, this is actually looking decent. See that passive absorption? We have a red delta, but that huge wick, big buy side imbalance right there. Although I don't like to see that we are forming a CVD divergence. So we might flip bearish. This is kind of ugly. I don't really necessarily know if I would. I don't think anyone's wrong if they are entering shorts right here and they feel more confident and are willing to risk a little bit more than me, because we do have imbalances being held. We have very strong bullish price action still near the point of control. When we came back down to the point of control, we reacted very strongly off of it, showing, large market orders participating in the trade. And then there we go. So I may take, if it held and we closed through that point of control, I probably would have taken a short for a small order off of that, targeting the dailies. POC, I'd do more than one here, like 2. Where do we have daily session point of control right here? And there is large bullish imbalances at those levels and just below. And this is also an area of demand, right? There's really good indication that between value area of the daily profile and value area low of the session profile, it's a great indicator to tag. This is an area of demand right here. This brings price back into a discount. we also have AOD, area of demand. We also have this yellow line running directly through it. That's that daily session volume profile point of control that's been running since market open. So very, very good indication that price is going to be returning to these levels. We had marking the entire session on screen. Volume weighted average price will adjust. And where is it sitting? Right in the bullish volume imbalances at that point of control. Price is right now imbalanced. We have pushed into a premium, and it is most likely going to search to become balanced again. Where these volume profiles are so uncorrelated, again, I'll be very weary. I don't like the... If I was to hunt for shorts, like right now, I think the only types of plays where we're so premium that I would actually want to take would be short trades. But I don't like how strong of reaction we are getting from these levels. If I was to take longs, I would wanted to have taken a long from those lower levels. But we do have sell side protecting this value area high level. Big imbalances up the top of the candle. So right now is a tug of war. We have huge imbalances on both sides of the aisle. And this is going to kind of determine who's going to win the battle and where price is going to go. We have, let's see. So there is not a CVD divergence on the histogram, but we do have a CVD divergence. Pretty large drop off down here, but it's not pretty. It's ugly. It's actually showing me that we are most likely going to push even higher. Sellers are probably going to let go. They aren't moving the needle much. So I will just read some price action for you here for a minute, and we'll see what we do. Or we could see large follow through. We could see sellers let go. This again would be the area that I would expect to see the continuation of trend or the beginning of the new reversal. So we'll just have to wait it out and see. Rolling up on 9 p.m. and that is also another very strong time frame to see reversals. But my assumption would be that where we've held such bullish price action tonight, there's really strong odds that we are going to... Am I live right now? Yes, I am. Okay, good. I just got so nervous. I've had other weeks that I wasn't actually live, and I spent forever talking to myself. So sorry. I just had a little... I did not want to do this again. But, yeah, we just formed relative equal lows, too, which is a good sign that at that level, price hit a wall of buyers. There was a large limit order placed for multiple contract entries at this. Price hit that level and it essentially formed a wall. We could push up. We have a red delta though. So again, I think this is longs kind of letting go, but based off of last night's price action and the trend of the week, I think it is likely that we would see Asia session push into, we might see light manipulation right now down to balance itself, and then London continue higher and potential reversal in New York, or another print off of today where we rebalance price and then flip to new all-time highs yet again. We are reaching for very bullish PA right now. I think something significant would have to take place so the buy side has won the auction. Shorts are losing. So again, this isn't ideal for me. And if I would have wanted to have been actively on this chart, monitoring it, my trade would have really been right here to have taken that long to either POC or value area high, potentially let it run a little bit longer, leave a runner on if you would like, and you can capture some more gains just by moving my stop loss, say when I entered a trade, right here, I would have a limit, or I'm going to just actually show you. If I had created an order at this level, this would automatically execute the sale of my position if there's any new viewers watching. So at this level, as soon as we see price hold these imbalances, continue higher, once we see another level of strong imbalances, I think it's wise to start capturing profits. I probably wouldn't have moved all the way up here yet because we have these unfinished auction levels. As you can see, price retrace back down to finish the auction. That's a very common occurrence. And if you leave your stop loss right at that level of imbalance where you have a green highlighted area, the likelihood that you are going to get stopped out is high. I very well may have, though, because at this case, there'd already be $250 on the table for $100 in risk. So I'm up 1.5 R. Here's the move I was anticipating. We have strong shorts stepping up to the plate. Let's see. Let's see how we react off the point of the control. I very well may take a short. Wow, really, really large absorption. This is what I've been talking about. So institutional absorption from this level, we disrespected these relative equal lows, meaning we pushed right through them, although I don't like to see this, a candle body with no wick. That is what I mentioned earlier. That's called a devil's mark, coined by ICT. I would call that buy-side liquidity. That now becomes a draw on liquidity. Price is likely to return to this level, and buy-side participation is stepping in. So we have absorption on both sides of the aisle. I am up great on the week, so I'm going to choose to sit on my hands tonight, end this here. I'm not going to take any trades this session, and I will just be on for the New York session tomorrow. So if you are interested in learning more about trading, I do not charge a thing from you to hop on in that Discord, QR code on the right-hand side, and I will give one-on-one education, all sorts of stuff. We're very active on the trading floor in there. It's completely open. Hop on in there, ask any questions you would like. Everybody is super friendly, and we are a very small community, but we have some awesome traders in there that are all really great, down-to-earth guys that only want to just help you excel with your trading journey. So again, thank you for watching. If you haven't already, please like and subscribe, and go get them. All right.